Hello and welcome to today's episode of NETSOL's podcast series. I am Jason Hurwitz, your host, and together we'll be exploring the sometimes quieter but no less dynamic world of wholesale stock finance, which is the lifeblood of the auto and equipment finance retail industry. We are focusing on one of the industry's biggest challenges today, and that is fraud. Fraud in the wholesale finance market takes many shapes, and it's vital for lenders, dealers, and technology providers to work together to understand and mitigate those risks. Today, we're going to dive into the most effective fraud detection and prevention techniques. We're going to identify current gaps in how we're protecting the industry from fraud and discuss how, and importantly, how competitive pressures in the industry are influencing the balance between ever stronger controls and also offering a seamless customer experience. Now, technology is playing an increasingly crucial role in detecting and preventing fraud. And we're going to examine a little bit how innovation is shaping the future of fraud protection and where that's going, and the benefits that technology can offer lenders as they imagine what solutions could look like. And we're going to ask ourselves, if you could wave a magic wand, what would that be? Alongside these insights, we're also going to hear some personal career reflections of our esteemed guests, including the advice they will give their younger selves if they could go back. So let me start by bringing a warm welcome to our expert guests who bring a wealth of experience and unique perspectives to this very important conversations. Firstly, Adrian Daly, thank you very much for joining us. You are the Director of Motor Finance and Strategy at the FLA, and many know you already, I'm sure. You have over 37 years experience in public policy, though you look not a day over 20, including roles at the Financial Ombudsman Service, in the European Commission, and you bring deep regulatory insight and a passion for public service, and you also serve as a non-executive director of the Institute of the Motor Finance Industry. And today, you're going to help us discuss, obviously, wholesale finance and fraud, which might be a moment of brief relief from the Commission's topic. So thank you very much for joining us.
Thank you.
Tim Maffey, you are Director of Stock Funding at Secure Trust Bank V12. Thank you very much for joining us. And you've been there for many years. You've over 20 years experience, including senior roles in GE Capital, and you bring a strong and impressive track record in strategy, pricing, and performance management. You also chair the FLA Stock Financing Group, which is all there to create best practice across the stock finance industry. So thank you very much for joining us.
Thank you.
And third but not least, Simon Bryant, you're part of the NETSOL team. You head up wholesale sales across Europe for NETSOL Technologies. You've been in the asset finance industry about 35 years, including roles in Lombard, BNP, Macquarie, and Haydock Finance before joining NETSOL, where you've built stock finance businesses from scratch and run them commercially. But now you're able to bring to this discussion a unique sort of dual perspective, to having been lender and also now in the tech space, to understand how tech can help some of these critical issues like fraud. So thank you, Simon, for joining us.
Thanks. You didn't mention that I didn't look a day over 20 either.
No, I did forget to mention that, actually. I'll try and do that in my closing remarks, Simon.
Thank you.
So what we want to get out of this podcast is to share our combined insights that we've seen and our experiences and where we think the industry is going, particularly obviously around fraudulent behaviour, because it is a fast-moving space, and any practical tips we can share our listeners on what's happening today, and also to how to get ready for the risks that might come tomorrow. So to that end, Tim, if I can put the first question to you, let's start with a bit more defining where we are and what we're seeing. So what do you see the different types of fraud and the challenges around that in the stock finance industry that you've come across?
Yeah, so no, thank you. I guess for us, I mean, fundamentally, vehicles are a mobile asset, which brings different types of fraud risks to, say, property. Primary fraud risk that we see in stock funding occurs where vehicles are sold out of trust. So that's where the dealer sells the vehicle and then utilises the funds elsewhere. Fraud exists where dealers fund vehicles that they don't have good title to. So sell or return vehicles, or simply fictitious invoices, as we've seen. And then finally remains that risk of double funding, where two or more funders fund the same vehicle. We see that where you've got sort of multiple funders and, let's say, not great data sharing between the funders.
Absolutely. And Simon, with your experiences in the lending space on stock funding, what have you seen, and where does often fraud start?
Yeah, and I know we call all instances sort of fraud, and my experience, most of it doesn't start out as I'm going to defraud you, or I'm going to scheme and build a huge fraud and disappear off to a country that doesn't have extradition with the UK. It more often than not starts with a dealer that is potentially short of cash. So it's I can't afford to pay you right now, so I need to do something that I shouldn't be doing, but I will pay you next week. And of course, the finance company generally has no knowledge of those particular issues, and so the dealer in their own mind, if they get away with it once, may quite possibly do it again. And obviously the issue comes to fruition at the point where they can't pay you next week. So they have to do something else to kind of keep the lid on it, which potentially means committing another fraud or doing something they absolutely shouldn't do. And it then tends to grow. And whilst we lump everything into a kind of fraud basket, and I guess I'm not a legal expert, but I guess you would call it fraud when you looked at it. My experience, lots of it starts out as, I'm just a little bit desperate at the moment, so I'm robbing Peter to pay Paul. And at the point where you rob Peter but you still can't pay Paul is when it all kind of goes wrong. So that's been my experience over time anyway.
Yeah. Anything you want to add around that, Tim?
Yeah, no, I mean, as you say, fraud isn't happening in a vacuum. You've got, it's driven by squeeze margins from dealers, gaps between lenders' controls, and then just, as you say, sheer pressure to fund fast. Add sophisticated digital fraud, and you've got a recipe for risk to rise without a proper control framework.
Yeah, and I think it's sometimes because they can, because some of those controls aren't there or there's a gap, and that for me has always been absolutely key, is you need to close as many of those gaps as you can, because sometimes it's just inherent in those customers that I can, therefore I will, because I need to, and the reason that they pick you rather than somebody else is that you have a slightly bigger gap, and that
perhaps they start off thinking this initial funding is a victimless crime. My words, but it then obviously grows and concatenates quite quickly because they've not had enough money to repay Peter.
I have to say, I think if you ask most members of the general public, they would see that as a victimless crime. I think finance companies, banks, it kind of goes with the territory, and it's like, well, you're a big bank, you're a big finance company.
Yeah, I'll pay you back in a few weeks anyway.
Where's the harm?
Yeah.
It's just a few thousand or whatever it might be. So, yeah.
I mean, frankly, that kind of attitude also exists in the retail finance space where, an asset finance contract, they might slip a payment on that because they know it's easier to do that than use the overdraft, for example. It's almost the same mentality of, I'll just delay that one, I'll pay it back in a couple of weeks because the asset finance company is not going to charge me penalty interest. Anyway, Adrian, around those risks that Tim and Simon have mentioned there, you get the benefit of working across the industry and seeing how a lot of lenders are operating, particularly on this important topic. What are the best fraud prevention techniques that you've seen that your members have explained to you and you've kind of witnessed?
For sure. Well, first, you're right that this isn't a victimless crime. Customers, all of us, suffer. The higher the risk, the higher the cost of that risk, the more we all pay. So this matters. We're in an era of dealer consolidation. Dealer margins are ever tighter. So dealer consolidation has been increasing for some time, and that's not going away anytime soon. And a percentage of those dealers going down will involve fraud of some kind. Now, no two frauds are the same. They're all different. They all start differently, but they can have a common cause. So what works in this space is ultimately getting the right information to the right people at the right time. So there are some common early warning signs of a dealer that might be at risk of fraud, and there are some common factors that can be identified. And if those common factors are identified, the data's brought together from different sources, you can, in your risk register or risk radar, have tools that actually identify dealers that are more at risk than others and might be worth looking at more closely to head something off before it accelerates like a snowball going down a mountain. So ultimately it's about identifying what the right risk indicators are, packaging them up together at the right time with the right people, getting to the right people at the right time.
Yes.
That doesn't prevent everything, but it significantly reduces it. So ultimately, like all things in this space, it's about learning as you go along, learning what the right indicators are, tweaking your model, and moving forward.
Yeah, absolutely. And you touched on something really important there, which is the data around this. And I think one of the industry issues is data sometimes held, particularly in legacy systems, in silos. So you don't get that aggregated view of an early warning signal. So you don't get to nip it in the bud and treat it early before it grows into something, whether intentional or not. So have you guys experienced those challenges, Tim and Simon, where you, due to perhaps data not being surfaced as broadly as it could be, you end up trying to scan an awful lot of activity rather than focus, as Adrian said, on the ones that matter and make sure you deal with those quickly because you're having to manually review a wider portfolio?
Yeah, I mean that's the challenge of risk management generally. I think you're trying to triangulate in on where the risk may be, and actually individual data points may not actually represent a risk in of themselves, but when you combine them together with two or three other factors, then actually that should be then highlighted to an individual. I think it's one of the challenges with sort of legacy systems and so on of having to look across so much data as a manual exercise, but you still need someone ultimately who can interpret and then ultimately speak to the dealer to challenge.
So if we say that siloed data is a sort of gap in fraud prevention, what other gaps do we think exist today that if we could help the industry, what might those points be to improve how we can protect against fraud?
I think in this space, it's those things where time is of the essence. They say in politics that a week is a long time. A week is a very long time in fraud. So there are open source data out there that are used for other purposes that, if triangulated, as Simon says, can make a real difference here and really save you time. For example, there's asset registration data, which everybody does or should be doing. And it's a pretty constant the way it performs. So you can identify outlier behaviour or people who are registering data whose behaviour has changed. That's all possible. Equally, there's marketplace data readily available, where generally speaking, most operators in a similar market have fairly similar bell curves of performance. Where you see either those with outliers or especially those who've developed different behaviours, you might think, well, there's one player who's now an outlier, might indicate nothing except someone's gone on holiday or something. But when there's two measures at the same time becoming outliers, that takes you into a different place, for example, on those two metrics. Indeed. So anything that can bring together that kind of behaviour as it happens, not a week or 2 or 3 weeks after the event, that's careless talk saves lives, time saves lives, as it were. That can make all the difference.
Absolutely, and you have to do something with that data. That's the thing. You have to, where does it goes into the hands of an expert?
Well, that's it. In that
operator.
sense, I know that the stocking finance sector is an unregulated market, but it's linked to regulated markets where FCA rules apply. And okay, we can have a very long conversation, a very different podcast about FCA rules, but some of the FCA rules are pretty sensible, like their CISC rule book, which talks about having systems and controls to manage your business. Now, that's not just to protect consumers, it's to protect your business. And it's what I said earlier, it's about a well-run business that's sustainable will be gathering the right information at the right time, combining it in the right way and getting that information to the right people with the right governance at the right time.
Yeah.
That's what a world-class business looks like in any sphere. That's what a regulated market's got to do, and stock finance as unregulated, no different.
Yes, indeed. That's a very good point. Simon, you coming in?
Yeah, I was going to say, in terms of gaps, and Adrian has sort of very helpfully covered the high level. Just in terms of down at a very granular level, and you mentioned it, Tim, earlier in terms of sort of ghost vehicles that they've never had title to, don't necessarily exist, and the thing about stock finance is it's fast moving, it's the lifeblood of the dealers in terms of cash, so things need to happen really quickly, and there's always an element of trust in stock financing, which can be abused. So, for example, they haven't paid for the vehicle yet, or the vehicle isn't on premises. So they haven't paid for it, but they have a registration number and a VIN, so they're able to get the right data. And it's things like, okay, how do we prove that you've got that vehicle and it's actually on site, that it's not coming over on a boat and it's not at the other end of the country and still on somebody's drive. So that for me is a gap, because you can't physically prove, so it isn't financially viable for a finance company to send somebody to go and prove that vehicle's there. So I know finance companies do audits, physical audits, and I don't think that will ever stop. There will always have to be physical audits, because you're not just checking the vehicles, you're checking that people are actually walking through the doors of that dealer, that it's an active dealer, that it looks and feels like a dealer that's actually trading, and that the stock is in good order. But there's another part of that. You can't have hundreds of people across the UK all of the time, every day, verifying that a dealer has bought a vehicle. So there are some gaps, and I know we're going to come on to where technology can aid that. I think Tim and I, having been directly in that space, will acknowledge that technology can play a part.
Yeah, no, I'd agree. Yeah.
Tim, to building on that, we could all, and any lender could sit there and develop a very long list of controls they could put in place, to their nth degree, and using full imagination, ignoring all practical realities. But there are counter pressures on what controls you can put in place, including your own OPEX. How much cost could you put in your own business? How many checkers, auditors do you have, or external parties can you bring on, because you have a return to deliver? But also competitive pressures. So about around the customer experience, you've got to make sure you're delivering a positive customer experience to your dealers, or you won't win any business and your business will fail. So there are some counter pressures. How do you see that?
Yeah, as you say, competition's a double-edged sword. I think it can drive lenders to cut corners, but vice versa, it can make the best lenders develop new practices and technology with their partners and with their own technology. I think as you say, there's clearly risks. Pressure to fund fast. It used to be fund within 3 days was good. Fund next day was good. Fund same day is good. Fund intraday is now good. There's a pressure there to actually fund faster and faster from competitors. Clearly, margin pressure then pushes questions around where you invest your money, and then the other element of competition, I think, is just around data sharing between organisations. Competition does give you a challenge in terms of just that ability for institutions to trust each other. But on the other side of it, as I say, the best institutions will use that competitive tension to actually drive investment in their technology, which then gives them a win overall because they see lower losses.
Interesting.
And that's a very good point, actually, where you need a level playing field here so that it works well in everybody's interests. And Tim, you're the chair of the FLA Stock and Finance Group, and we support you in that. And one of the areas we're working on is developing common standards in stock and finance, which are exactly about that, including at a very granular level in the things you're talking about as well, where it's about, when do you register your asset at the asset registration agencies, for what purpose, when do you deregister it, equally important, and how do you register it, etc. All these things, they sound pretty boring, but if there's a common understanding that's lawful, then that creates a level playing field, and people are competing over the right things, not the wrong things.
Yes, because you're right. If you have an outlier, that becomes a gap. If somebody isn't doing it in the same way, the right way, then there's a gap that may be exploited. If somebody is slow to deregister or too keen to register and registers ahead of the curve, that can actually have a negative impact in the business. And I think we've all seen it. There will be some that are not operating the right way. I'm talking about dealers now. Dealers not operating the right way. As soon as they see a gap, then they exploit it. So you're absolutely right. It's key that, and we're not talking about collusion between businesses. We're talking about proper industry standards, that everybody does it the right way, and then you close those gaps, don't you?
Exactly, and that's ultimately what the law says, because competition law is very clear, and we're very, very hot on competition law at the FLA. Competition, what the board basically says is that competition must work well in the interests of the customer. And in that sense, if we're developing common standards here, or common standards of best practice, that does enable competition to take place on a level playing field, and that is in the interest ultimately of the customer, because the customers ultimately are the ones who bear the cost of fraud.
Absolutely, yeah. It's not a victimless crime.
Exactly.
The customer bears the cost.
We all pay the cost.
Yeah.
And I presume we think there's more work to do in that space collectively, with the help of the FA, to facilitate those industry level discussions to arrive at some stronger, more defined common standards.
That's really important. I mean, the FLA Stock and Finance Group is relatively new, but as it's a sector that's developed quite quickly, and a very good and innovative sector it is too. So ultimately, for those watching this podcast, if you're a stock and financer and you're not on that group, you should be. So please engage.
www.
Please engage with people. Exactly. Please engage with people like those in this room. This is what matters. We can all create a safer market going forward that actually works well. Yes. And everybody, including the customers, better off at the end of the day.
So moving on to the next chapter in this podcast is, how can operators in this industry leverage technology to help with fraud detection? So Simon, I'll start with you, if I may. What are your thoughts and reflections?
Yeah, so there are currently, and there are in train, I think from a variety of sources, lots of technology that can help. So, and it wouldn't be a NETSOL podcast if I didn't mention AI. That's my only mention of AI. So AI can help. So where if you perceive there's a problem with fraud, you might think that throwing more and more people at the problem will solve it. And 10, 15 years ago, that would be the only answer. It's more people looking at more data. I think AI will help and can help in pulling that data together. So even potentially pulling it from a number of different systems. So no one's saying you have to have a fully consolidated system today, but if you can integrate those, use some AI to, it clearly learns, it can see where those trends are heading, and it can flag those up for individuals to review. So I think that's particularly one area.
So for all our listeners and watchers, thank you very much for joining this podcast series about fighting fraud in wholesale finance. It's been a really interesting discussion and very interesting to learn about your personal career. So thank you very much. What is clear is the perpetrators of fraud move very quickly. So the industry needs to move even faster to stay ahead. And AI can be part of the solution to doing that, but it's also going to be part of the problem because AI will also go in the hands of nefarious people. So it's desperately important that every operator in this space embraces the tools to stay ahead of people that want to do this industry harm. But nevertheless, we talked a lot about technology and the benefit it can have, but it's about making humans and expert humans more productive. It's not about replacing them all. So that's key, and that's come through thick and fast. So that's really good to hear. There's a lot of challenges this industry is facing. It's particularly around data in different places. So there's a lot of work to do to bring things together. So stocking finance operators can operate efficiently, deliver the right shareholder returns, deliver the right customer experience, but protect those businesses from fraud, whether it be deliberate fraud for those wanting to leave to countries of no extradition, or fraud that's not intended as something significant at the start but grows into something. So it's very, very important to bring those things together. So thank you very much for joining us. I really appreciate your time and your expertise in sharing your experiences. It's been fascinating. So thank you. So a small plug for NETSOL. A NETSOL Transcend platform has got market-leading tailored wholesale finance capabilities. We help lenders, dealers, distributors and auditors with unmatched user experience and risk management. Transcend streamlines processes, reduces costs and elevates the dealer engagement via stocking-specific apps and portals. NETSOL Transcend brings high automation into stock finance to accelerate processes and help operate a strong returning stock finance business.